Thank you, Mr. Chairman. Mr. Zandy, I'm not going to ask you because you're wearing a, some kind of dart on your chest or something out there.
Oh, a dart. Oh, I'm used to that. I grew up in a big
It's
family.
very tough to determine what's happening in the marketplace because the marketplace is not normal today. I mean, the quotes that we had about the jumbo loans being competitive, there's 70% loan to value, 50 FICO scores, and stable income for 3 years. You look at the conforming mortgage, well, say $85 billion is being bought each month by the Fed, so it's almost impossible to look at anything today and say that's the norm and this is where we go from. My only concern is, will financing be available for home ownership? I remember back in 1983, and remember how bad that was. I had major lenders telling me that you'll never see a fixed rate 30-year loan again. That proved, thank goodness, not to be true, but prime rate was 21.5 then. Fannie and Freddie made some horrible, horrible mistakes. But in 2008, the default rate for the jumbo marketplace was greater than Freddie and Fannie's even. So everybody in the marketplace made horrible mistakes. They made loans they shouldn't have made. They made them to people they shouldn't have made them to. And we ended up with a mess on our hands. I mean, the first $2.7 trillion lost in mortgage default market, $180 billion was lost by Freddie and Fannie, which they owned a bunch of it, but that's still $180 billion they should not have lost. So there's no excuse for any of it. But what do we do today is my concern. Now, Mr. Ecken, you wrote last year an article that should another housing bust occur, Congress will intervene in some way. I think that's probably a reasonable statement. And yesterday, Chairman Bernanke echoed, if we don't define the role of government, won't it cost taxpayers more in the end? So there's some red flags that we need to look at and say, what do we do? My question to you is, without a guarantee, what happens in time of crisis? And I think we need to worry about crisis. Will investors be there to purchase mortgage-backed securities, and would interest rates tend to rise?
It is a very good and a difficult question, and I've struggled with it. A
You're
lot
on
of
the
the
committee.
issue of a federal backstop,
Yeah.
the focus today has been on what will a 30-year fixed rate mortgage look like. That's one way to think about it. But the second way to think about it is, what's the cheapest taxpayer protection we can get? Because if you do believe that in
I think Freddie
a
made
future
some
crisis,
horrible mistakes.
a Congress
I'm with you.
will intervene. Will that be more expensive than something that is a backstop price now? That's a fair question.
And my concern is,
that I worry about.
as your statement here last year in Bernanke's, is the government's probably going to end up being there, and that's a huge concern if we don't define some role and purpose for them. But numbers bother me, and I say, let's look at the market today. What is the private sector doing? Banks own about $1.5 trillion of wrapped form mortgage-backed securities. Foreign holders own approximately $1 trillion of wrapped. Fed owns $1 trillion of wrapped. Insurance companies, state and local investment funds own about $1 trillion between them in wrapped. So you've got about $4 trillion in residential mortgages to buyers who don't buy unwrapped mortgages. And I'm looking at a huge sector of the economy that's buying only wrapped. Mr. Leventon, you've kind of got by unscathed. I'll throw this one to you. Can you, as an academic, tell this committee and the American people that the market participants are wrong in what they're doing today, and that some other fashion is right?
That they're wrong in only buying wrapped?
Yeah.
No, I can't say that. That I think that as a mortgage investor right now would have, should rightly have a lot of concern about credit risk on any loans that are being originated, and therefore would want wrapped securities.
Any of you, there's no definition of the TBA market. That's a huge concern for me out there, because there's no front and there's no rear. Mr. You got your microphone open, go for it.
Let's keep in mind that part of the existence of the TBA market is because Fannie and Freddie have 1933 Securities Act exemptions. So, I mean, you could craft those sort of exemptions for a TBA market that allows you to sell that forward.
But if we don't do that, on the front end and back end, connecting the person who wants to buy a house with the person going to buy the loan could be problematic. Mrs. Zandy, you touched on that briefly. The bullseye's back on you at the conclusion. I have 30 seconds. So what do you think on the TBA market? Is it necessary? Is it something that's
Yeah, I think that's a very important part of our mortgage housing finance system. It provides liquidity, keeps rates much lower than they otherwise would be, and we need to preserve that under all circumstances.
So Freddie and Fannie have made huge mistakes, no doubt. I'm not defending Freddie and Fannie. Something has to change. But there's some holes that bother me, and TBA is one of them. The wrapped on the investment side is the other. And Mr. Chairman, thank you for your time. I yield back.
Chair now recognizes the gentleman from Georgia.